If you've ever opened your phone and seen 50 scary headlines in a row and thought, okay, am I supposed to do something with my money right now? Well, you're not alone. The world is louder than ever. More opinions, more hot takes, more breaking news, more politics, more experts, and somehow, despite all of this, we have less clarity. Today, I want to talk about one idea that explains this perfectly, what I'm calling the signal-to-noise ratio. Now, quick context. My background is in computer engineering, and I'm a bit of a closet audiophile. I love good sound, and I love good sound quality. Audio signal-to-noise ratio is simple. It's the music you want compared to the hiss, the hum, and the static that you don't want. Early wireless radio had tons of noise. Vinyl and cassette was a step up. Vinyl is warm, but you also get pops, crackles, and with tapes, you get hiss. Then CDs came along, and that was much, much cleaner than anything we'd seen before. And now we have high definition audio, which is so clear you can hear the tiniest of details, like a singer even taking a breath. So over time, when it comes to audio technology, it got better at pulling out the signal and reducing the noise. But in finance, it's the complete opposite. The signal is still there, but the noise has exploded. See, in investing, the signals are things like company profits over time, economic growth over time, innovation, productivity, real value, and of course, a plan that matches your life. The noise is everything that tries to hijack your emotions today. Think scary political headlines, sudden market drops, the social media doom loops. Oh, and we can't forget people yelling, sell or buy like it's a sport. Now, here's the key. Your job as an investor, whether you do it yourself or you hire someone, is to stay focused on the signal when the noise gets loud. Let's go over 3 real examples of what turned out to be noise in the last 10 years. Let's go back to late 2018, what I call the almost bear market. In 2018, the S&P 500 fell about 19.8% from its September peak to Christmas Eve. At the time, the drop felt awful and people were convinced something was breaking. But then the market recovered those losses, and by April 23rd of 2019, the S&P 500 closed at a new record high. So the noise just lasted a few months, but the bounce came back faster than most people expected. Fast forward to 2020, nobody will ever forget, and of course we have the COVID crash. This is one of the clearest examples of a total panic and a snapback recovery. The S&P 500 hit a high on February 19th, 2020, then fell about 34% just over a month later to a low on March 23rd, 2020. That is a brutal drop, and it happened very, very quickly. But the recovery was also very fast. The S&P 500 closed at a record high again just a few months later on August 18th of 2020. So from peak to bottom was about a month, and from bottom back to a new high was just 5 months. So following COVID, about 2 years later, between 2022 and 2024, we had inflation and rate hike fear take over the headline. This one wasn't a quick dip, it was more of a long grind down. The market fell about 25% from its early 2022 high before it finally found its footing. And then on January 19th of 2024, the S&P once again closed at a new all-time high. That's important because it shows something. Sometimes the market snaps back fast, sometimes it takes a little longer, but either way, people are screaming the whole time. So what do we do with this? Here's the mistake I see. People treat investing like it's a reaction game, like you need to respond to every headline. But headlines are not a strategy. A real strategy sounds more like, here's my goal, here's my time frame, here's the risk level that I can stomach, and here's my plan when markets drop. And most importantly, here's what I will not do when I'm scared. Because the truth is, markets are designed to test your patience. The noise is part of the price you pay to earn a long-term investment return. And this is where a professional can help, especially if you're doing it yourself and you're not 100% sure you want to do that job forever. A good advisor's job isn't to try to predict the next headline, it's to help you filter the noise, stick to the plan, and rebalance when it feels uncomfortable to do so, ultimately to help protect you from emotional decisions that can permanently hurt your results. noise. In other words, as an advisor, I'm trying to give you the high definition version of your financial life where the signal is clear and the noise gets turned down. If you're tired of feeling like you have to watch markets every day, if you want a plan you can trust even when the world feels loud, that's exactly what I help people do. Because the goal isn't to win the news cycle, it's to build a life where your money supports you, your goals, your vision, while allowing you to comfortably sleep well at night. I'm Nader Nasr, Senior Portfolio Manager and Wealth Advisor with RBC Dominion Securities. If you like this video, then be sure to subscribe and hit the bell icon. That way you'll be notified when I drop my next video. I'd love to hear your thoughts. Shoot me an email, and if you have any subjects you'd like me to address in future videos, be sure to share those too. And if you have a friend that's having trouble picking out the signal in all this noise, do them a favor and share this video with them. Thanks for watching, and I hope to see you soon.